Are you ready for the biggest tax increase in stock market history? If not, your wealth could be at serious risk. In this video, I'll reveal the strategies you need to protect your hard-earned money and ensure you don't go broke when Uncle Sam comes knocking. The stock market is about to face an unprecedented tax hike, and if you're not prepared, it could be disastrous for your finances. This is the biggest tax increase we've ever seen, and it's going to hit investors hard. That's why it's critical you understand what's coming and how to safeguard your wealth. So today I'll take you to how to not go broke during the biggest tax increase in stock market history. If you're new to the channel, hit that subscribe button and that little notification bell icon so that you don't miss out on any of our video updates. Plus, it helps us spread the Thrive Wise love to help more people thrive wisely. Now, let's begin. The tax increase we're facing is unlike anything we've ever seen before. The government is raising capital gains taxes, dividend taxes, and income taxes on investments to levels we've never experienced. And they're going to be doing it all at once in a coordinated effort to raise revenue. This means that every dollar you've invested in stocks, bonds, mutual funds, and other securities is about to get a hit with a massive tax bill. We're talking about potentially losing 30%, 40%, even 50% or more of your investment gains to taxes. And it's not just your investments that are at risk. Your retirement accounts, your savings, your real estate holdings, anything that generates income or capital gains is going to be impacted by this tax tsunami. But it's not just the taxes themselves that are the problem. It's the ripple effect they're going to have on the stock market. When investors start selling off assets to pay their tax bills, it's going to create a downward spiral that could wipe out years of growth and gains. Alright, now that we've covered the magnitude of the problem, let's dive into some strategies to help you navigate these treacherous waters and keep your wealth afloat. First and foremost, we need to talk about diversification. I know, it's investing 101, but hear me out. When the taxman cometh, you don't want all of your eggs in one basket. Imagine you're a medieval peasant with all of your wealth tied up in a single cow. When the Lord's tax collectors show up and demand their cut, you're left with a couple of hooves and a pile of manure. Not exactly a recipe for prosperity. Instead, you need to spread your wealth around like a mischievous raccoon raiding the neighborhood trash cans. Stocks, bonds, real estate, precious metals, even cryptocurrency, some commodities, small businesses, and the more diversified you are across different asset classes and sectors, the better insulated you'll be from any single area taking a tax beating. Diversification acts like a financial force field, deflecting the impact of taxes across multiple fronts. Speaking of crypto, this could be the perfect time to explore the wonderful world of decentralized finance. Cryptocurrencies like Bitcoin, Ethereum, and privacy coins offer a potential refuge from prying eyes. Thanks to their anonymity and pseudo-anonymous nature, they could provide a little tax haven for your wealth if done correctly. Just be careful not to run afoul of any laws or regulations. Make sure you understand the compliance rules, file any necessary forms, and keep impeccable records. The last thing you need is the IRS showing up at your door dressed like a SWAT team, battering ram in hand. Next up, let's talk about tax advantage accounts like 401ks, IRAs, and health savings accounts. These powerful tools allow you to sock away money on a pre-tax or tax-deferred basis, and then you let it grow tax-free until retirement age. It's like having a little financial Fort Knox where Uncle Sam can't get his greedy paws on your loot. So, maximize your annual contribution to these accounts to shelter as much income as possible. And don't forget about Roth options as well, which provide tax-free growth and withdrawals in retirement. But don't go overboard and put all of your eggs in a tax advantage basket either. Remember, diversification is key. You want a nice mix of taxable brokerage accounts and non-taxable retirement accounts to help weather any storm that comes your way. Now, for those of you with some serious capital gains on the horizon from investments or business sales, it might be worth considering charitable giving strategies. By donating appreciated assets like stocks or real estate directly to qualified charities, you can potentially avoid paying taxes on the gains while still claiming a deduction for the fair market value. It's a win-win scenario that lets you do good while minimizing your tax hit, as long as you're strategic about it. Just be sure to work with a knowledgeable advisor to ensure you're maximizing the benefits while staying compliant. And let's not forget about good old-fashioned tax planning and optimization. Work with a qualified financial advisor, CPA, or enrolled agent to ensure you're taking advantage of every legal deduction, credit, and loophole available. Things like bunching deductions, maximizing business write-offs, utilizing loss harvesting strategies, leveraging the qualified business income deduction are just some of the tools in the tax pro's arsenal. It's like finding loose change under the couch cushions. Except instead of pocket lint, you're saving thousands or even millions in taxes over your lifetime. Another powerful strategy worth considering is income shifting. If you're self-employed, a business owner, or have income from multiple sources, you may be able to strategically shift income into future years when tax rates could potentially be lower. For example, an owner could take a lower salary one year but higher distributions from the business another year to minimize taxes. Or you could employ an installment sale to defer taxes. It's like playing a game of financial hopscotch, hopping over the high tax years and landing in the lower ones. For real estate investors, techniques like cost segregation studies and accelerated depreciation can be gold mines. A cost seg study allows you to reclassify components of a building purchase so you can depreciate them more rapidly. Combined with bonus depreciation, this can dramatically reduce your taxable income in the early years of ownership. These are complex strategies best left to seasoned real estate pros. But when executed properly, they can pay dividends in tax savings. And finally, let's talk about mindset. When faced with adversity like a massive tax increase, it's easy to get caught up in fear, panic, and despair. You start imagining worst-case scenarios of losing everything you worked so hard to build. But successful investors know that freaking out is the surest way to make poor decisions and sabotaging your own wealth. Instead, approach this challenge with a calm, calculated mindset. Think of it like a game of financial chess against a formidable but predictable opponent. The government just made an unexpected power move by raising taxes. But that doesn't mean the game is anywhere close to over. You still have a surplus of pieces on the board and an arsenal of strategies to employ. So stay nimble and be willing to adapt your strategy as conditions change. But never lose sight of your long-term vision. Most importantly, stay disciplined in your tactics and unwavering in your commitment to growing your wealth. Don't let short-term volatility or the media's fear-mongering cause you to make rash, emotionally driven choices that derail your carefully constructed plans. Remember, building legitimate, multi-generational wealth is like tending to a garden. It requires constant nurturing, protection from the elements, and a delicate balance of different inputs working in harmony. This tax increase is simply one of the storms your financial garden will need to weather over the years. But with the right tools, knowledge, techniques, and mindset in your arsenal, you can ensure your wealth not only survives, but thrives for generations to come. Amidst this historic tax overhaul, there are a few critical steps you need to take to safeguard your wealth and financial future. First, diversify, diversify, diversify. Don't keep all of your eggs in one basket. That could get cracked by taxes. Spread your investments across different asset classes, sectors, and tax jurisdictions to mitigate risk. Next, maximize contributions to tax-advantaged accounts like 401ks, IRAs, and HSAs. These shelters allow your money to grow tax-deferred or completely tax-free. For large capital gains, explore strategies like donating appreciated assets to charity or employing charitable trusts. You can minimize taxes while doing good. Work closely with a qualified tax professional to optimize your situation through legal deductions, credits, income shifting, and tax loss harvesting. Their expertise is invaluable. If you have real estate or run a business, look into accelerated depreciation, cost segregation studies, and the qualified business income deduction. These techniques can dramatically reduce taxable income. Above all, maintain a long-term disciplined mindset. Don't panic or make rash decisions based on short-term volatility. Approach this as a challenging but solvable aspect of growing your wealth. We've covered a lot of ground on protecting your hard-earned wealth from the biggest tax increase in stock market history, from diversification and tax advantage accounts to advanced strategies like charitable giving and income shifting. Being proactive and informed is critical. Also, let me know in the comments, what strategies are you employing to navigate this tax onslaught? What areas do you need more guidance on? I'm looking forward to an insightful discussion in the comments down below. Well, that's basically how to not go broke during the biggest tax increase in stock market history. And thank you guys so much for watching today's video. And hey, it seems that YouTube thinks that the next video can completely transform your financial situation. Watch it to find out whether they're correct. And please don't forget to click the subscribe button to see more videos on how to thrive wisely. Till next time.